natural order, even among chickens in a coop. Imagine how much stronger that order is when it comes to a company's sources of funding. Good morning and welcome to the channel. Today we are talking about a principle that, for those who do business or manage investments, is not just economic theory, but an unwritten rule that guides many practical decisions. The pecking order theory. Before starting, if our content is useful to you, we invite you to subscribe to the channel, activate the bell and leave a like. That helps us to grow this community of conscious entrepreneurs. So let's start right away after our intro. The pecking order theory was formalized by Stuart Myers and Nicholas Mayouf in 1984. The term pecking order comes from observing chickens. In a coop, stronger chickens pick first, weaker ones later. Companies show a similar hierarchy when choosing how to fund themselves. In concrete terms, the theory says that there is an hierarchy of companies' sources of financing, which are: first, use of internal resources, self-financing or bootstrapping; second, debt; and last, equity. So why this sequence? The basic assumption is that every firm prefers to minimize the cost of information and the information asymmetry to the outside. So let's take an example. A company knows well whether its project will work or not, but the market doesn't. If it goes to investors, they will demand a risk premium and demand a higher share of capital. If, on the other hand, it is self-financing, it avoids this information cost. The pecking order theory is based on two fundamental assumptions. First is the information asymmetry. It is difficult for those on the outside to really understand the state of health or potential of a company. And the second is the issuance cost. Raising capital requires time, money, communication, consultancy, and can expose the company to unaffordable judgments. For this reason, companies prefer to use their own resources first. They have zero cost, no external constraints, and no risk of dilution of control. That comes only when internal resources are no longer sufficient, and only a last resource they go to equity investors. This theory is not just academia. In practice, we observe the same behavior in many small and medium enterprises, and even in big ones. Let's think of a family business. It often prefers to do self-finances, perhaps even tightening its belt, rather than bringing in external partners. The same goes for many startups. The bootstrapping phase is, in fact, the first step of the pecking order. But for startups, bootstrapping is a conditional decision by the fact that angels say they invest in the pre-seed and seed stages, but they don't. Be careful. Theory has limits. For example, debt is not always available or sustainable. In high-risk sectors, banks may not lend. And in those cases, equity becomes more than a choice, a necessity. Criticize over level of the pecking order theory concerns its too rigid approach. The reality is more nuanced. Some companies prefer venture capital early on, especially in technology or in innovation sectors. Other limitations are: it doesn't consider behavioral factors, risk aversion, desire for control. Again, it doesn't consider tax breaks or public incentives related to debt or to equity. And it may not be valid in extremely advanced financial markets or in presence of very aggressive private equity. In addition, the theory applies best to established businesses. Knowing the pecking order theory is useful for those who do business planning or are looking for funding. It helps to understand how competing companies move, how you position your choices against best practices, and how to justify a financial choice in front of a bank or investor. Classical example: when drafting a business plan for a bank, explaining that debt is the second choice after own resources can strengthen the credibility of the project. So, for today we stop here. If the video was useful to you, we invite you to subscribe to the channel and leave a comment. Have you ever resort to external sources of funding? Did you follow, maybe consciously or not, the logic of the pecking order theory? Let us know in the comment down below. See you next week.